All right, so here is another downtrend. Now, I want to make sure you guys understand that, right? So a double bottom setup, right, is or one of those setups you get during a downtrend. A double bottom setup is a 50-50 trade, right? I try to say that a lot. Let me help you understand what I mean by it's a 50-50 trade. It doesn't mean that the setup is not valid if you get the full setup with the price action to execute. It doesn't mean it's not valid. What I mean by that is a double bottom is a downtrend because it have not broken a previous high yet, right? Because they didn't break a previous high yet. We don't have the full trend reversal aspect of it, right? We just have equal lows. That happens a lot. What do I mean by that? Look, when you think about every single zone, right? Like right here, don't you think markets had stops here, right? So this is a previous lower low, right? These are all lower lows. Remember, in a downtrend, we get lower lows and low highs, where each low is lower than the previous low. And the lower high, yes, it's higher than the lower low, but it is getting lower and lower, right? Look, don't you think the market did stops here to give you this possible double bottom, right? Notice what I'm using, possible double bottom. Yeah, it did stop there, but what did it do? It broke right through, right? That's why we don't assume, oh man, it's gonna buy. Oh man, no, just simply wait for your PA, aka your price action. If the market does not give you a price action, just let it go, right? Because if it breaks right away, you could get the 3 candle breakout. Check me out on YouTube. You'll see the video on that because a breakout is what normally you get before a break and retest. Okay. So just like here, right? When the market came to this area right here, don't you think it had stopped to give you another possible double bottom? But this whole time it's a downtrend, right? This whole time it is a downtrend. So be patient and wait. Don't assume or call the setup out until it become a valid setup itself. Okay. Now, market did give you a lower low and it came back here, another low within the same low. Okay, so all that is one low. It just happened to be a triple hit. What do I mean? It stops here, went up. Okay, stop right here again, went up, and then it stopped right there. Now, it doesn't mean it's not going to break. It doesn't mean that. Okay, because that's just a bigger, you could call it a bigger consolidation. More like it's a range where you could take those trades. You could buy it here and you could also sell at the top. Why? Because it's so far apart. Okay. But you got to understand with the overall bias, we haven't had a trend reversal yet, meaning a previous high have not been broken yet. That way we understand once market give us that low high, once market breaks that low high and then give us that higher low for us to take that buy as a trend reversal. What I mean by that is this, to break this, right? Once it comes in, so we could take our buy to go up. Okay. So I just wanted to put that out there that way you guys understand why these books are very, very important when it comes to your learning to understand how the market moves. That way you don't get tricked out, you don't get played out. All right. It's still in a bearish trend. It just happened to be sitting there. Okay. Now, I think I had one more before we go to the chart. Yep. All right, here we go. All right. So again, just like I was saying before, lower lows. In a bearish market, you get lower lows. A bearish market also considered as a selling market. All right. It is a downtrend. You look for your sales at the low highs. You wait for the market to come back so it could give you a new lower low. Okay. That's where you look for your entries. Entries in a bearish market is at low high. Right. So we get lower lows where each low is getting lower than the previous low. And then we get low highs. Okay. Where each high is getting lower and lower. Okay. But these areas is where you're looking to take your sale, right? Is where you're looking to take your sale for the market to give you a new lower low. In the case of this, as you can see, right? So remember when I was talking about how the market may not give you a textbook per se, break and retest based on what you have seen. This is what I mean by that when it comes to the trend reversal, right? It did go up to give us that double bottom aspect, right? We got a big retracement. Instead of stopping here or here, right? Instead of stopping at the 50% or 61%, it went all the way back literally about 100%, right? Nothing wrong with that because we know we had a previous low. Market stops at this point, give us a bearish engulfing, right? Fell, matching this low, did not break through it, and then eventually, when it went up, it fell to give us a higher high, but it's staying within structures. Here is a new low high, right? Because this high right here, right, is lower than the previous one. But what happened in the case of this one, market failed to give us a new lower low. In the case of this, we have a higher low. Why? Because this one is higher than the previous one, right? See that? Right? So that's another aspect of, first part of a trend reversal. But a previous high still have not been broken yet until market went up to break both. Now, I'm not saying it has to break both, but it did break this one. And then it also break the next one. Now, here we have a new high, which is higher than the previous highs. And then it came back to retest this structure point, right? When it come back to retest, this will be considered as a higher low, okay? This is where you will look to take your entry. That's where you wait for your price action, a bullish engulfing to be more specific, to match or go past the previous high to give you a new higher high. All right. So these are different variation, different concept, different aspect of a bearish trend. All right. So let me throw that in there also for anybody. If you are watching this and you see this clip or you watching this on YouTube, if you are interested in learning this type of way, the engagement, the interaction, it's easy for you to understand the details, right? It's very informative. Go ahead and connect with us, man. Come join the family. Just type in Royalty FX Academy or check the link below. And again, if you don't have the money to pay for it, don't have the time for the Zoom, check us out on YouTube, Royalty FX Academy, so you can watch this video on repeat. Again, it will be breaking apart into 3 different sections where you could sit there for 15 minutes, watch it, and come back again. That will be a lot easier for you to absorb it and understand what you are watching. I don't want it to just be a whole bunch of words. Well, I don't want it to be very straining for you. I don't want you to sit there for a whole hour. 15-minute break, 15-minute break, easier to absorb, take note, and understand. Okay. Also, we do teach 4 times a day, and at the moment, our one-on-one session is free. Okay, we don't pay for signals. Our signals are free also. But for the most part, we are going to be taking the same trade. All right. Now, what we about to do now, we are going to transition to the trading view. We're going to look at the market itself, see market structure itself on trading view. Okay. Now, again, since we are talking about a bearish trend, hopefully you guys can see it. Again, like I said before, when it comes to the market itself, we always want to use the line chart. But in the case of this, I'm just going to leave it the way it is. I'm not going to use the line chart yet. That way you can see. I want you to look at it right now. And if you're able to tell me, right, the lower lows and the lower highs. All right, just take a look at it real quick. See if you could pinpoint the lower lows and the lower highs. Always remember, the lower highs is where you're looking to take your sell. Okay. Now, let's go ahead and do this, right? So we're going to go ahead and just move these around real quick. All right. This right here will be considered as a low high. Just like I mentioned before, after each what's wrong before? Wait, hold up. I didn't put that in there. Give me a sec. I gotta wrote it myself. So this right here is gonna be considered as a low high. Okay. Even though it's high, right? It's gonna be all right. That's a low high. All right. It's gonna why? Because it's lower than the previous high points, right? So On top of this right here would be our higher highs. We know we had a double top of this point right here. There's all higher high. So let's go ahead and throw that in there. Okay, higher high and low high. And then after each lower high, you get a lower low, right? See that? Boom. We just paying attention to the structure. We're not making anything else out of it. All right. We're not overthinking. All right. We're not making no assumption. We're just treating structure for what it is. Again, the turnaround point, the line chart show you the exact turnaround point. So I'm just keeping the candles on because I understand a lot of people get that a lot easier. You can see it. And then here, this double top is going to be the same low high. Okay. So let's go ahead and throw that in there real quick. Right here, it's going to be the same level. It's going to be the same low high. So that's where your entry would have been. Hold up. I'm saying it, but I'm not placing it in low high. All right, like so. Let's put it up. Okay. All right, see that? From a higher high, right? And the market stops here and went up. Now we're looking at this structure here as the previous high low. That'll be right there. Okay. So we could put this in here, lower low, right? Make sure you can see it clearly. All right, lower low, low high, lower low, give you a small little double top. So just like I went over when I was drawing it out, right? When we interact with the chart, we see the same type of concept of structure itself, right? So let's go ahead and get the next lower low structure, right? Remember, this right here is within the same level. So this right here will be next low point, right? So that will be the lower low point. Now, after that, we get a low high, which is right here, right there. Okay. Put that in there real quick. So low high. Boom. See that? And then we get another lower low right here. Okay. So remember, like I went over before, how the market just stops here. Right? You see how it just stops and then it started consolidating. It just sits there, right? And then went up for the retracement point. So if I draw a zone, which will be within here, mark it in the previous low point. Okay. I'm just going to just throw a zone just so you can understand it. Previous low point here. Okay. You see that? It went to it. That right there, again, will be considered as a low high, and that's where we will look to take our price action again. To be more specific, our bearish engulfing to take our sell. So I don't know if you could see it. That would be the bearish engulfing right there. You took the sell, stop loss at the previous high, right? And then you left that alone and you let that go. All right, boom, like so. See that? Easy work. All right, so just like here, I remember I mentioned it before. If I'll go ahead and show it to you how it would look like. So let's just say hypothetically, this right here was your bearish engulfing. Okay. Well, it is a bearish engulfing. I'm just saying if you had took that as your sell, right? So what I'm going to do is I'm going to range it out, meaning I'm going to bring it all the way up to match your stop loss at the previous high. You see that? That is your structure point. That is your entry. As you can see, yes, market went back against you, but it never went to wick you out because that's a previous high. So also, same thing goes for here. This right here is one of those, remember when I did mention if you get one candle that engulfed the previous one, or if you get two candles. In the case of this, it took two candles to engulf the previous bullish candle. So like so. I'm going to run it up, right, just to match the structure high that we have, right? So it's kind of like up here also. Trying to make it smaller. Boom. All right. There you go. Now, again, all TP varies. The goal is money management. The goal is not to lose. All right. If our stop loss is 250 and our next structure point TP happened to be 100, that's just what it happened to be, right? Because we make sure we risk in that same amount every time. That's what our rule says. And as far as how much we make, it varies. Sometimes it will be $1,000. Sometimes it could be three. Sometimes it will be 500. Sometimes it will be 100. You just got to follow the rules and try to be as consistent. Well, not try. You will be, right? You will be as consistent as you need to be just by simply taking it for what it is. All right. That's why I always mention that it's very, very important for you as a trader to have a job. Why? Because your 9 to 5 is going to pay your bills. That way you're not worrying about, oh man, I need to make this X amount of money in trading. It it could be very, very overwhelming. Okay. When you become a trader that just survive off trading, it's not the easiest thing if you haven't mastered these steps, if you haven't created that room, that breathing room for yourself. So allow your job to pay your way through trading school. Think of it like that, right? So remember, your job pay your bills, and then while you focus on your learning, just like a regular college course, okay? Your 9 to 5 pays for the dorm, your food, while you focus on going to class. All right. So we got a new low. To be more specific, a new lower low, as you can see right there, is lower than the previous low, right? And just like before, after a previous low, we get a high point, which would be right here. Okay, I'm just gonna put it. I'm just choosing to place it on top of the wick. Okay, I'm not being as precise with it. Low, high, right there. Okay, just want to make sure you understand right here. All right. Now, just like I mentioned before, when I said that it could bounce off of it and come back again and bounce, but just as long as it didn't break as long as it didn't break the previous low high, we know we're still in a selling structure. Also, you see how the market did goes up, right? It went up and it fell to give you a new a lower low, and instead it gives you a higher low where this low is higher than the previous one, and after that it went up to match the previous low high. It did not break. This is exactly what I mean when I say structure, when I'm talking about structure itself. Okay. Now after that, market did go to give us that next lower low, like right here. All right. Boom. And that right there itself, ladies and gentlemen, is structure itself. So entry points are at low high points. Now we get different variations of price action. All right. As long as we understand what it is, we should be just fine. Regardless of the stop loss, we are respecting it for what it is. Remember, if our stop loss is 250, all we doing is we are adjusting our lot size that way the stop loss equals to the 250. All right. We're not changing our play. All right. These are the first bearish engulfing the market give you. Right. I'm literally taking them for what it is. I'm not making anything up. I'm not saying I wouldn't, that I wouldn't do this. I wouldn't do that. All right. It is what it is. I'm taking it for what it is. Okay. All right. You see that? Again, it's not about how much money you're risking, as long as you understand that, hey, look, man, I'm looking to risk X amount of money, and that's the end of that. Now, let me show you this right here. Yes, did this trade play out? Yes, it did. Okay. Also, it's right here is your bearish engulfing. Previous high is like up where? Up here. Right here. Okay. Boom. Too far. Got to bring it closer. All right, cool. There we go. See that? Now, did it go your way? Yes, it did. It fell. And then it went right back up. Okay. And it went right back up. It went towards your zone. Again, there at that point, you either would it would get your winning trade, get out, or it would have hit you out in profit. Regardless, it was a well executed trade. And as you can see, your stop loss did not get hit based on the high structure point aspect of it. And here is our last sale, GU. Did beautiful for me right here. So let me go ahead. I didn't place let's put it right there. This right here, new low high. All right. So lower high right here. Boom. Let's go ahead and adjust that accordingly. Okay. Right here. And then let's go ahead and get this price action in the highlighted that you guys can see it. Okay, this is a most common price action where you get a single bar price action. What I mean by that is it's just a one candle. Okay. All right, you could see it, and then boom to match the low. Okay, so again, just like here, if you took the sell, it did match the low, right? And it did come back again to give you another entry. Let me go ahead and show you that also, which was right here. All right, matching the high points, which is like up here. If you can't see it, it's also within it. It gave you two price action actually too. So just in case, if you didn't notice that. So we had a bearish engulfing here where it took two bearish candles swing off the last one. And then we got a one single bearish engulfing where it only took one bearish candle to engulf the last buying candle. Okay. So remember, the market will always give you one of these six price action. If you want to be successful, look for these. Look for these setups, all right? Because that's what the market does. There's no need for crazy names or any word salad, all right? This is the setup, and that's how you trade, all right? This is pretty much it. And I'm gonna see you guys in the next video. Like before, I appreciate the like, the comment, and support. I truly appreciate it. Um, Go ahead and check me out on YouTube. Again, if you are interested in learning this type of way, if you feel this method is very engaging, it's easy to understand, you either click on the link below or type in royaltyfxacademy.com or just type me in Google. You will find us. We do teach 4 times a day. Well, I teach. There's no different teacher, so you're not getting confused. We do give homework every day, and at the moment, a one-on-one is free. If you don't have the time for that, if you want to just learn at your own pace, hit me up. Well, go on YouTube, watch the video on YouTube. Also, you could interact with the video on YouTube. If you go to Amazon and type in Royalty FX Academy, and then you will see the 7-book series masterclass and pick whichever one that you want to go over. Especially if I'm talking about downtrend, selling market, mastering the bearish forest, Success Inside Volume 2. If I'm talking about price action, we already know we have that, the ultimate price action itself. If I'm talking about buy setups with the bullish engulfings, the ultimate buying setups, that's what you will need to get. Okay. And if I'm talking about psychology, discipline paradox, and if you want to learn market structure for a bullish market, right here, Success Inside Volume 1, and of course, the ultimate stop loss, always placing it at the last high, last low. If you want a better understanding how to place that. So I have a book that covers every single aspect of trading. Okay. So just take your time and let's go get it. All right. So again, I appreciate you guys. Thank you for the like, the comment, and support. Keep on working at this. Still kind of new in a way. I'm learning to get better at this. Thank you again.